Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 167, 19th of January today. Today we are going to reinforce our belief that no investment is small. A lot of times investors, young ones, the ones who are starting their journey, don't start because they feel that their starting investment amount may be very small and no meaningful gains will come out of it. But we will showcase how regular investing, regular saving and investing yields large sums, even if you start very small. So we'll take a look at that, but first a look at the markets today. So markets after yesterday's fall continued to fall today. The overseas cues have been negative, and as well as the fund flows from both the FIIs and the domestic investors have also been negative, and the result season is on. Some results are good, some results are bad. So market is seemingly taking a pause before the budget and digesting the strong 2000 point gains it had in the last 4 weeks. Some of it has been given up. Nifty was down 1% at the end of the day from yesterday, and the primary drivers of the market down were FMCG, IT, consumption stocks, private banking. However, PSU banks were up 2.2%. That's very surprising actually. So there seems to be expectations that budget will bring around some good news for the PSU banks. And energy stocks have also been running hard along with some autos and metals today. So overall a weak day. And within the broader indices, small caps stood out at plus 0.23%, whereas the rest of the market were negative between 0.5% and 1%. Nifty Next 50 was also flat at 0.07%. In terms of the weekend investing small cases, MI 25 was doing very well at plus 1%, NNF 10 plus 0.7%, MI 50, MI all cap all were in the green, but some strategies MI ATH 2, MI 20, MI ATH, CNX 200 were in the red. So overall, a last 1 week has been a bit of a flat week, with large caps mainly losing out in LT CNX 200. However, other large cap strategies like Mi EverGreen have not lost as much, or NNF 10 for that matter. It probably remains to be seen how this plays out in terms of the global cues as well as the run up to the budget, navigating through the results that are coming in every day. So back to the topic, no investment is small, and even a start at 500 rupees, 1000 rupees or whatever little amount you can think of is a good start. So we always say that, don't try to time your start. The best time to start was yesterday. So start somewhere and then regularly keep investing for a very, very long time. This is not a short-term game. Don't think in terms of 1, 2, 3 years. Think in decades. And you will see that the past experience will give you a lot of confidence in terms of how at each level of the market it may have been looking like, that one should not start right now. But even starting from there would have given you tremendous gains today. So many folks may be under the assumption that nothing big can happen with a small monthly investment. We will show you the results. And any amount invested now can turn into a 268 bagger at a CAGR of 15% over 40 years. So last 40 years, if you had 15% CAGR, which of course is also not very easy to get, but in case you can get 15% CAGR, then your even a lump sum amount grows 268 times over 40 years. And when we look at the systematic investment plans, then the power of compounding is even more powerful. And you can see that a 5,000 rupee monthly SIP, and assuming that you can get a 15% XIRR with a 5% annual top up. So first year, each month 5,000 rupees. Then next year, you enhance it by 5%, so 5250 for each month, and then the next year 5% on top of that. If you keep doing that, then in 5 years your portfolio value is nearly 5 lakhs and your contribution would have been about 3 odd lakhs. In 10 years it will be at 16 lakhs, 15 years 40 lakhs, and you can see the compounding and the exponential growth that kicks in. 20 years nearly a crore, and then 30 years you get 4 crores, and 40 years you get 17 crores. So of course inflation will also discount these numbers, but as long as you are able to beat inflation by 5-10% on your XIRR basis, you will do very, very well when it is compounding. So many times we have given this tool also. So let's take a look at the tool. So this tool is available. We'll put it in the description below. This is a free tool. So you can put your desired monthly SIP. Let's say I want to SIP for 30 years and I can start only 500 rupees a month, and I am expecting 15% XIRR over a long period, and let's say I can top it up by 100% every year, so maybe like 20% every year. So 500 rupees per month this year, then 600 rupees per month next year, and then 720, so on and so forth. So even here with just 500 rupees monthly SIP, you reach large figures at the end of 30 years, and so on and so forth. So you can use this tool to build scenarios for yourself and see what kind of future portfolio value you can achieve by expecting, and you can reduce it if you like. I mean, if you are investing in mutual funds maybe, or index funds, maybe 10-11%, and let's say you are able to do, let's say, 10,000 rupee monthly SIP for 30 years, and you can top it up for 20%. Just see the kind of values that you can arrive at over time. You can also do this tool in another way, where you can decide ahead what is my future goal. So if I want 5 crores in 20 years, and let's say my XIRR is 15%, and I can top up annually by 10%, then I need a monthly SIP of 19,000 rupees to start today and finish in 20 years at 5 crores. So this is the kind of reverse scenario building that you can do based on your goals, and of course your financial planner can help you do this as well. And third is of course a lump sum basis. So if let's say I'm investing 10,000 rupees lump sum and I don't do anything to it, what happens in 40 years at 15% CAGR? You get 268 times your original investment. So these are some of the tools that are available to you. You can freely use them and build your own scenarios. So in closing, basically never underestimate the potential of any investment. Each investment can grow very, very large provided you put it in the right strategy, provided you give it a good runway of time, and if possible bolster it with periodic payments into it. Developing the mindset to invest prudently, of course, is very important. It might get difficult to break spending habits and start investing all of a sudden. So go in the order: earn well, save well, invest well, and you will be on the path of great investing. As I said, best time to start was last month. If you've missed that, then this month is the best time to start. Starting will make no difference. The person who started with a 5,000 rupees SIP at the peak of the market in January 2008, over the next 13 years would have minted money like anything if I were to calculate that CAGR and returns for you. So that starting point has virtually no meaning when you will see it 5 years, 10 years hence, that where did I start? Unless you are wanting to do a major lump sum payment, the timing of the start has not much consequence at all. Invest a portion of income regularly for long periods, reap the benefit as time goes by, enjoy your life, and make investing a habit and not a adrenaline pumping exercise. And once you will form that habit of monthly, deploying money into a sound strategy, you will see that the results are really beautiful. So with this, I am ending this daily bite. Thank you so much for watching, and I'll see you in another video. Bye.